investors.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all have been having a fantastic day. Of course, we had Larry live trading earlier, and that might have been the quickest session. I don't know why. Larry remarked the same thing, but it was a great morning. If you guys are interested in getting in that, and this market is wild, you can go over to TFNN.com. Go ahead and check out Live Trading Friday. So the next one is going to be the 25th. This is the second and fourth Friday of every month. But of course, you'll be able to come to the one on the, I think we're going to do the 9th in May. How about that? We're almost in May, halfway through April. Of course, we're going to be off next Friday for Good Friday. Let's take a look. Yeah, listen, you know, I have this on my personal terminal. I have a little watch list I'm calling it, it's called Trump Industry. This is now maybe in my opinion, kind of like a useless term now, but you know, I'm liking the uranium. I like the rare earth. Now, to be fair, things like USAR and MP have not been doing well today. Cameco Corporation up 6.66% right now. Man, remember, we're looking at this thing as like, yeah, $35. What a beautiful buy that would be. And then UUU. And listen, I believe that equities are going to come back down. You know, this is probably some short covering. Open interest is up a little bit, so you know you do get some buying, but the VIX is still elevated. UUUU up 8.84%. And again, so what is the theory behind this? Well, obviously on the long term, these would be long-term holds for sure. Now, you might be able to kind of play this whipsaw kind of pattern with everything. Dan, can you not get the video loaded? I'll see if I can reset it during the break. You know, you might get some whipsawing, so it might be nice in general with equities just to kind of buy when you get these massive tanks, come back up. Because what I'm thinking is most likely going to happen, I still think we probably have a little bit more to go here, but you might end up getting back into kind of like a 2022 pattern, right? So let's back off here. And again, there's not a lot of volume today anyway. Kind of almost like the selling is off. The buying's not that strong. Even with, I mean, the VIX is still somewhat high, but let's pull this back like this. And if you kind of remember 2022, this isn't a great example because it's the 15-year. We can maybe go to the, you know, you had, I mean, this sell-off is perhaps a little bit more dramatic, right? And this is again on a weekly, but if you take that to a daily, you'll see there's just a lot of up and down patterns. And it's not until about 2023 in April that this market really wakes back up. And that got us to about, what, February, and with that double top there, and then here we are, of course, giving everything back. What are we trading at right now? Back in April of last year. Quite a movement to the downside, obviously, through all this. And to be honest, I still think we probably will see some to go. The liquidity soaking up, the volume soaking up here is definitely interesting. I think this market is kind of tired right now, so that could absolutely bring in some buyers in the near term. You know, there's this big conversation now that the Fed might inject liquidity into the market, right? Basically do a quantitative easing, buy some of the bonds. If it is true to the extent that, you know, everyone's saying it is, that a lot of this is having to do with the hedge funds unwinding their treasury basis trade. I don't think that's, one, that's not a permanent thing. Two, I don't think the Fed would open up their balance sheets to that. Then again, if this is because you're looking at, the dollar decreasing as well. I mean, we hit below 100 last night. And while you're still getting the yen appreciating in and of itself, the dollar dropping is exacerbating that drop in the USD to yen. And then with this massive movement into gold that you're seeing, I mean, what I think this is kind of suggesting is that people don't want to be, at least in short term, even like medium term US bonds. I mean, you take a look at, it's just a flight away from the US. And you can't totally blame them for that, right? Let me see here. With the demand for the 30-year was pretty cool, which was nice, but that was still a flight to duration. Okay, I mean, you're at 4.86. I mean, no. See, this is give me a second. Let me get to the 5 days here. I mean, even with the demand that you were seeing with the 30-year at the auction, you're still getting some moderate sell-off, right? I mean, you're at 4.86% right now. You were at nearly 5, I think, last night. And the 10-year, I mean, that continues to kind of increase too, and you're stalling out around that 4.5 area at 4.48. But I mean, this is, in my opinion, this is kind of just people with investors not wanting to trust the U.S. right now. And, you can't necessarily blame that, right? I mean, there's a lot of sovereign risk that's now been added into this. Unfortunately, I think the whole thing with rallying the world against China is not going to work. And we've seen China working with van der Leyen. China just visited Spain, and now they're making research deals. So, this could end up being, a significant shift in just the global financial markets, I mean, this movement to gold is at least, this is a true flight to safety right now, right? And again, traditionally, you see that flight to safety, especially if there's just an issue in equities. I'm sure the problem in bonds with the unwind is, and then the fear again of, overheated lines with everything going on in Japan. I don't think China's really dumping bonds in that way. They might be, but I could see that being I don't want anything to do with that in the near term, and maybe that resolves itself when everything kind of chills out. But at least what you're seeing right now is a flight away from that. I'm not really sure why the equities are pumping like this. Again, it's not on a ton of volume at all. And you are seeing things like Tesla. I mean, earlier Tesla was getting a lot of attention. NVIDIA was getting a lot of attention. These guys, this is becoming quickly an equity that I think is very interesting beyond, what was interesting about it beforehand. We'll talk a little bit about that when we get back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Yeah, welcome back, everybody. I think I got my mic on there. Taking a look at NVIDIA before we went to the break. That's trading up 2.35% at 110.12. You're looking at something just to hold. And again, we could see some whipsawing right back to the downside. That is something to keep in mind if you're holding equities. If you're doing this long term, you do not need the money or whatever in the moment. That's what I'm talking about with this. But listen, I don't know how this ends. And to be honest, I don't think anyone knows how this really ends. Do the tariffs persist? What do they look like if they do? Just anything, I'm not even sure it's going to rain tomorrow anymore, even though my computer is telling me that. I think we're defunding the NOAA. But my point being is that you've had some tariff or no tariff. NVIDIA, I think, does very well, right? And so why do I say that? Obviously, before all of this happened, NVIDIA was doing extraordinarily well, and there was still valid demand. I liked that they were kind of diversifying their business. I mean, going in and actually doing like product development for other companies in the form of like GM or whatever is, I think, super attractive for NVIDIA. These guys are like sharp people, and I could really say that about, because I've just seen them meet any potential, I shouldn't say criticism because it's not what it is, but any holdup I had. And you remember, I was kind of like iffy on NVIDIA, and I really liked Broadcom, and I still do. But with NVIDIA saying like, hey, we're going to start working with other companies that design products to implement, AI into them, that's huge. I think that's great. Additionally, China's always going to need NVIDIA. I don't think they're close to making anything like the chips that NVIDIA can provide, those H20s. With the tariffs, there is a chance that NVIDIA can totally skirt all of them. China harms themselves pretty heavily if they're going to tariff NVIDIA H20s, right? Now, of course, they're getting other more advanced chips as well through what could be Singapore, Indonesia, whatever it might be. But I think these guys are like transcendent in a sense, just because of the kind of civilizational demand of AI, what that's going to be like. Listen, you still had companies reaffirm CapEx for data centers. One of the headlines that went kind of unnoticed due to everything is one from Oklo, or about Oklo at least. Now, Oklo is down 0.66%, but I have a feeling that that is That headline is kind of what's influencing CCJ, still hovering right about that 6.6% of the upside, and Energy Fuels. Again, I like both of these companies quite a bit. For my purposes, I'm not really into a lot of equities. These are ones that I might buy if we traverse back down near those lows and just hold on to and not care about. But that headline is Oklo getting that kind of green light. Interesting. So you started getting coverage on it. Was selected by the DoD as one of the companies eligible to provide microreactor power systems for military bases. That's pretty wild, okay? So you're still getting this digitalization in a way of the military, meaning they're going to, I believe, probably expand the use of whatever Palantir is doing for them. Logistically, perhaps, having these microreactors on those bases is not a bad thing. Because nuclear power is awesome in nearly every way, and you can just keep generating power. Now, one thing I want to say about Oklo again, this is not the time to be buying, in my opinion, talking to myself here, a company that doesn't have a product, blows through a ton of capital. This is cool stuff, right? But it doesn't mean anything right now. And it's pretty unclear, when this could ever mean anything. And I'm sure there are other companies that are getting attention in this kind of way, right? So that's something to keep in mind. Again, just a quick recap on Oklo, one of Sam Altman's companies. They are doing natrium fast reactors, okay? So that's like sodium cooled, and one of the benefits of the fast reactors, unlike the other reactors that we've had, legacy reactors, is that you can more finely tune the energy output, right? So it's not a binary on-off. It is, floating point almost, if you want to think of it that way. So it's cool, and the concept is cool, but they just don't have anything yet, and they burn through a ton of cash. So that's my thought on it. Again, still like CCJ, still like UUUU. Let's see what UEC is doing right now. Up 6.28%. So yeah, because some of the, obviously gold miners doing phenomenally right now, your rare earth miners are not really. You have MP, and I don't know if I'm not considering uranium when I'm talking about rare earth, but I'm not sure it's considered that either. You have MP off 2.51%, and then USAR as well. USA rare earth, that's off 0.12%, right? So I'm having a feeling it has something to do with that headline. And if anyone else has a headline in nuclear, please let me know. So that's what we got going on. Let's take a look as well, since we're kind of in this topic, of crude. This long has been very interesting, and this is something I would definitely say, again, you get massive dips in it. I've been in Gush and have been doing pretty well, and I sell in and out of that. I don't like holding leverage ETFs necessarily. I know some people do, and that's fine. Just not what I want to do right now. You're having some problems right now with some countries with the price of crude coming down, right? This is basically anticipating, my opinion, recession in the U.S. Oil is consumed a lot less during that time, but we're getting into summer as well. I don't think this will last forever if we do end up hitting, recessionary environment. I think shorter term kind of calls on it are a good idea for myself. And again, every time I'm saying this, it's because I would do it for myself. And but if you don't want to do the calls, or you're not, whatever, I forget what it's called, okayed to trade futures, Gush is a great way to get exposure to that as well. That's over from our friends at Direction, trading up 7.36%. There was a lot of cool pivoting, up and down that's going on, right? And that volatility, can be very fun to play and very profitable as well. That's a lot of why when I get on here, of course I work for the company, but why I bring up, things like Larry Live or the opening call or mastering probability or market insights, any of that, is because we have our traders constantly looking at this. And I learn a lot from them as well, especially being a younger guy, who's not been trading for as long as these guys have. So that's kind of like some of the interesting stuff, at least I'm looking at right now. Of course, you have some issues if you're, in BABA. I think this is probably kind of toxic right now. I'm surprised this is up that much, and I don't know how the ADRs get affected by Trump wanting to delist Chinese stocks. Because, you have this weird little proxy in here with the depository receipts. And so, when he says, I'm going to ban Chinese stocks off the market, you have things like Pony or Poet even, for instance, that are not ADRs, and they're just raw on the market. I don't know if that applies to BABA and BYD. That's something I want to take a look at a little closely. Because I think with that threat, I wouldn't understand why you get in it. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Just taking a look at news here right now. Obviously, had JPM come out. They had some pretty good earnings. Jamie Dimon, what do you say? There's going to be a kerfuffle in the bond market. Man. Is this Friday? Oh, this is beautiful. TGIF, guys. I'm trying to think here because I've been so messed up on the days and the earnings. Essentially, he said that going forward, because the earnings report I'm looking at is for Monday. He's essentially saying that he's anticipating, you're going to have poor guidance. You might have suspension of guidance in some cases on some of these earnings, Again, I don't know if we're out of the woods yet with all of this, right? And it's great we have the SPY up right now. Your open interest is increasing a little bit, so it's not just, short covering. But I still think this is just a little touchy of a situation. Let's talk a little bit about, I want to look at Palantir, because even though the market's been doing actually quite well today, Palantir is not doing as well. You're off 0.38% at $88. This is, again, I have to reiterate, a very strong equity, all things considered. Please take a look at anything else in this sector and tell me what has held up as well as Palantir has, right? So, that in and of itself, I think, is a testament. Very expensive as it stands right now. The expansion potential for Palantir is quite large. Especially if you're considering that, the military is going to adopt this kind of process that they have. Of course, they do Maven for the Air Force. If this expands out to the rest of the military, Palantir will be just like, seriously, just like another Raytheon, just like another Lockheed Martin. Additionally, one of the things that I'm very interested in for Palantir is what they're calling vibe coding. Again, we've discussed this before. But it seems like they'll probably bring that to the consumer market as essentially telling AI what you want coded and in what language, and it'll do it for you. And apparently it works very well. So that is extremely appealing to me, even with some of the cuts that we're seeing with military spending. And again, I don't know how this turns out. If we end up having funding issues. And they just rose the debt ceiling, so I'm assuming we're probably not going to have funding issues, at least at home. But, I think it's just a very strong equity, and it's one that's been very I do wish I actually kind of bought this on this dip, even though I was not interested in any other equity at that moment. What I will say is there is some very interesting stuff. Excuse me. It seems like they're removing senior leaders in cybercom, and they're gutting out a lot of the NSA. It seems like there's not going to be as much funding for that, cutting CISA's workforce. Now, one of my big reasons for liking what CTM was doing, which is Castellum, is that their balance sheet is improving. Still kind of expensive considering, but their balance sheet is improving. And again, this equity is actually held quite well too, which is kind of interesting. Again, you had some nice strong support at 1, and you're really just trading right under there, right? The worst you got, keep in mind, it's like a 20% move, obviously, right? From like 1 to here. But, relatively speaking, you're holding pretty decently, right? In this level. Now, if there is going to be disruption in funding for cybersecurity, or it's going to take a very long time to get these institutions, whatever, cleared out of people who don't agree with Trump or whatever it might be, things like Castellum could absolutely take a hit. And what you're betting on when you have Castellum is that there's going to be a ton of government contracts coming out for cybersecurity. What is interesting to me as well is this is occurring simultaneously as China admits that they have entered into our telecom network, that they have done multiple hacks and breaches of U.S. government databases, which is insane. I think that's crazy that they even said that. We hypothesized the other day that he said that as a way to kind of stop Trump from saying, hey, this is my buddy. They admit like, hey, you know what, we're already here. Let's just do this and admit that, because that's a pretty big step for the Chinese government. They usually deny all involvement. Naturally, don't blame them. Of course, they use North Korea as a proxy to do these kind of things. But that's something to keep in mind. I know there are probably a few people, I know of a couple at least, that own Castellum. And so I'm talking to you when you're listening to this, but just do some more due diligence on that, and anyone else listening. Now, if this gets reversed and you want to spend a lot more on cybersecurity, and again, we just don't know what he's going to do, and some of these, again, this positioning is kind of a little bit sketchy for that. Because Castellum gets tanked if they don't start putting out more contracts. But again, as it stands, it is held somewhat well. It is an interesting kind of equity for sure. Let's talk about some of the earnings for next week. We're taking a look on Monday. One moment here. On Monday, we have Goldman Sachs. I would assume probably similar kind of deals as JP Morgan, Trade Desk doing quite well. Some more, honestly, financial systems. Applied Digital, which could prove to be an issue. RCAT, supposedly, they've had a bunch of problems. This is probably not one, you want to buy and play earnings. It's up 6.12%, which is kind of weird to me. Dropped. I looked at direct offering after 30 million. This is what I mean, right? Like when you're getting these bizarre kind of like pumps in traditional meme stocks, it just makes me question like the legitimacy of the overall move. And we had applied that logic in the past, and you had, and of course, correlation isn't causation in any capacity, but we had applied that a little bit in the past, where these weren't like legitimate moves to the upside. Now, Red Cat with earnings on Monday is interesting, but I haven't seen any further, contracts being signed by the Trump government. Our whole thought with Red Cat is there is a potential for them with their short-range reconnaissance drones to see some vast implementation at the border. I've heard nothing about that. I've not even seen people, who are officials out at the border even discuss this in any of the interviews they have that explain how they're kind of positioning themselves to further secure the border. So that is a massive issue that I think Red Cat will probably run into if they cannot get that. And then Tuesday, you have Johnson & Johnson, more financials, Bank of America, Citi, ASML will be on Wednesday, which will be vastly interesting as well. And again, I think Jamie Dimon's probably right. How can you give forward guidance in a time like this? I think it's pretty difficult. Folks, stay right there, we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. A short little break. Man, what's this news? It looks like trade with China is probably going to just completely cease here. I think they were initially talking about putting tariffs on Tesla, which I think a lot of retail guys are not. Anyone really in Tesla, not necessarily thinking about. You're off 1.09%, definitely doing worse than the rest of the market. BYDDY, if the American depository receipts don't get just completely blocked, something like BYDD could be somewhat interesting if trade does strengthen between the European Union and China. That'd be kind of interesting. This really has been quite like the interesting event, hasn't it? And again, not a lot of action today at all. So I think this market's just tired. Let's get a little reprieve. We'll see what happens this weekend. Maybe there is some kind of resolution between Trump and China. That'd be interesting. If you get resolution like that, if you get injection into the market by the feds, then you'll see just some like face-melting rallies to the upside. However, you listen to like words from Cash Carry, and again, I kind of want to talk about how important it is like you're getting news, from like aggregator sources. Just be very careful with these, like what you're reading, because I saw something today from Cash Carry, about Cash Carry, where saying the Fed is ready to pump liquidity, into the market. But that was something he had said like years ago, and for whatever reason, it started getting recycled again, and I saw that coincide with a modest bump. And then, of course, you have Powell saying he's ready to inject liquidity when it's needed. I don't know for them when that is. Again, that must suggest, right, that whatever is going on in the bond market, maybe isn't permanent. I do think you're getting people who don't want anything to do right now with U.S. debt or the dollar. So a flight away from the U.S., which is a problem, for how we operate. But, if they're not injecting, then they must not see it as like it's still bad, right? But as like a globe-ending kind of issue. And you get better PPI today. CPI was cooler. What Trump was doing with energy did work to kind of cool that down quite a bit, because I think a lot of the producer price index falling was because of energy. Yeah, it dropped 0.4% from a month earlier. Excluding food and energy, it's also eased 0.1%, which is below estimates, because I think the estimate was about 0.2%, if I remember correctly, to the upside, actually. So this is decent, right? This is deflationary, right? And the big issue with the Fed injecting any kind of liquidity, and I don't think they're ready to do it yet. One, because there's a chance they probably just see a lot of this as, the suppression of the price of the bonds as whatever the hedge funds are doing, which they do this every few years, I guess. And then, so they don't see necessarily a reason to inject the liquidity right now. Again, if they did, this would be massive. But if you're still worried about inflation, which is pretty clear from the commentary consistently from Powell and from cash carry that they are concerned about persistent inflation. I mean, you had another Fed guy say, what the heck was his name? Can't remember. Regardless, he was like, yeah, we still got to get inflation under control. And so just one positive reading is not something you can extrapolate months in advance and then say, you know what, fine, we're going to cut interest rates by 50 basis points, by 75 basis points, or whatever the heck it was that people were pricing in when it was at 3.8%, and then be good to go, because you really do, you run the massive risk, seriously, of stagflation, right? You had, who was the guy who said it? Yeah, Austin Goolsbee, Chicago Fed, said that the tariffs are acting as like a stagflationary shock, right? Because you still get price increases. Now, a lot of that's going to depend with consumption, but the problem with tariffs, again, if you're getting them, like actually getting them, which of course we have a pause right now, it seems like stuff's just going to cease from China anyways, you create a floor, right? And really at some certain point, you're crushing margin if companies have to lower their prices so consumers will buy, right? Chances are they'll probably pass these on. And I think you're having some guys from Amazon say the exact same thing, that they're already starting to see something. Of course, people are adding tariff surcharges onto receipts, and I don't know how much of that is legit versus, maybe a few businesses just trying to do it to make a point. But the point being is that like you are getting charged more for it, so we'll see what happens. Meaning, I just don't think we're out of the woods yet. Yeah, and I think pumping the market right now on some kind of hope. Again, I would say a lot of this is just short covering, but on the hope that the Fed's going to inject liquidity, I think that creates much more difficult long-term problems, And I think things have just gotten pretty convoluted now with this whole plan, right? Supposedly, he will be speaking this weekend with Xi, or at least he wants to, and it would be great to kind of resolve this, but who's to say that'll actually kind of happen? One thing that I did read that I kind of want to bring up to kind of temper my NVIDIA transcendent comment, right? And I still think they're there for a while, right? But this is just published maybe 30 minutes ago. But China is dumping about $8.2 billion in state funding program in order to try to essentially compete with Western chip stocks, right? Which is going to be NVIDIA to some certain extent, obviously Broadcom definitely. They have a ton of AI stars over in China, right? They can spend the money right now. They need to print more money and everything, and I'm sure this will be a massive way for them to absorb it. Now, probably these things will be very similar to whatever NVIDIA is selling them. And one of the things I want to say as well that causes shocks is that Chinese are very good, at least within the AI, of they have not up to this point been cutting edge in any capacity, right? They've been the only ones implementing good kind of like efficiency parameters on the AI, and that's what you really saw with DeepSeek. Again, DeepSeek was not necessarily the best by any means, and it wasn't really a new thing. It was distilled off of stuff, and they added different, as I said, efficiency parameters. But even with this, and I'm sure this at some point does become an issue for things like NVIDIA and Broadcom, but NVIDIA and Broadcom, and I'm going off of how the past usually works, will probably stay ahead of China for quite a while. Let's see what else we got going on here. The SPY trading up 1.91% at 534.65. The composite up 1.96% at 16,710. Dow Jones Industrial above the 40,000 mark at 40,287, up 1.71%. Russell Futures trading up 1.3% at 1,869. The dollar still relatively low. Crude oil ticking up. Let me see what that is. Yeah, so this is, again, another thing that I think is somewhat bullish for it. U.S. refiners are not planning to make big ticket investments to process more domestic crude and less oil. Okay, geez, from top suppliers, Canada and Mexico. Industry source, that's in and of itself kind of, pressure from the upside, to the upside for crude. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. Jacob should get a short segment here, then we're off to the weekends. Not much to say on United Healthcare right now, up 1.19%. Obviously, kind of a signal that a lot of investors are fearing a recession when you get stuff like this. But something I thought was kind of ridiculous was, remember they got hacked last year, massive cyber attack, which kind of affected them pretty negatively. But so what happened is they had launched a funding assistance program for the medical practices that had issues with short-term cash flow because of their bad security. Okay. So they're offering no interest loans with no fees added. Now, apparently, the doctors are not paying them back. So a little over a year later, United Health is aggressively going after borrowers, demanding that they, quote, immediately pay their outstanding balances, according to documents. Optum, United Healthcare's financial pharmacy and care services arm, is telling borrowers that it reserves the right to begin offsetting claims payable to the practices. I mean, just right there, right? This is nuts. The ensuing disruption due to the breach, again, because of their bad security, the ensuing disruption caused severe fallout across the healthcare system, leaving many providers temporarily unable to get paid for their services. Some dipped into their personal savings to keep their practices afloat. It is just nuts to me. This is such a weird world, isn't it? Someone said, yeah, the one doctor was saying, we're not in like a position to start repaying loans. Looking at things from a legal standpoint, but we're paying them $750,000 in 5 days is obviously not going to happen. Oh my God. Well, quite the end, the calm end, the boring end, to a very interesting week, folks. Thank you so much for joining me today. We'll see you Monday morning with Tommy O'Brien for the Morning Market Kickoff. Take care.